Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and our model portfolio is up 22.95% year to date. The stock market strength color signal is green, and our goal here at Spy Trader Now is to beat the returns of the S&P 500 buy and hold investor, and we are currently doing that. Their portfolio is up 20.55% year to date. Last week, the S&P 500 gained 0.26% for the week, so very little bit of a gain. Here, this is a weekly candlestick chart going back a duration of 5 years for the S&P 500. And you can see that we had a 10% pullback, 9.7% pullback from this high to this low right there. And let me just show you that a little bit better. From there to right there. And right now we've kind of broken out above that high range right there. And we are now trading just above that. But when you're looking here at the candlesticks, kind of looks like we're not making much advancement right now. There is kind of a negative divergence here on the MACD on this chart. We've got price action moving up, but you get the MACD that still hasn't surpassed this trend line right here. But the MACD on this weekly chart is positive. Last week, we made no trades. Here are all the trades that we've made in calendar year 2024. And you can see our return right there. And you can see what our profit is on each of the transactions and our hold period in the number of days that we've held the positions. If you want to see how I trade this portfolio throughout the year, go ahead and hit that like button, subscribe to my channel, and ring that bell to be notified when I post a new video. All right, here is an equity curve on a percentage basis of our model portfolio and the S&P 500 buy and hold investor. Now, basically, my portfolio the model portfolio has been moving sideways because I did in the money covered calls, and the market slightly advanced during that time frame. So we didn't make money, we didn't lose money, we just kind of moved sideways during that time period. All right, now we are looking at a daily candlestick chart with a 6-month time duration. And here you can see that we've had a low here, and then we had one cycle with a low here, and then we made another cycle, and I'm thinking that that right there is another low. In other words, that low is mimicking this low right here, meaning that we are now going to experience some type of an advancement before we come back and pull in a little bit. So we should, if that strategy or theory is correct, I should say, this trend line here should be broken within this week. And it should, the market should, if this strategy is correct, this theory should kind of come up before it kind of tucks in a little bit. And kind of like mimicking this kind of a motion right there. So only time will tell, but that's where my head is at and what I am thinking this market is going to be doing. Now, some of the things that look good here, the slow stochastics did bottom, getting ready to cross above its signal line. The MACD is below its signal line, but just barely moving parallel, and it would not take much to carry that over. Now we are looking at a ratio chart of the NASDAQ 100 to the S&P 500. That is the chart that is in red and black. I also have on here the S&P 500 in dark blue, which is right here. Now, this ratio chart is an indication of risk on. We were in this trading pattern moving up. We have moved out of that trading pattern, but we did bounce right there, and we are moving up. We are above the 50-period moving average and the 10-period moving average right now. All of these signs, including, look at the MACD. You'll notice here in how the MACD started to go towards its signal line, did not reach the bottom, and now is curling up and making advancements. That's a bullish look to it right there. Slow stochastics, bottom, moving up. All of these things are telling me that this S&P 500 is going to advance. All right, now we are looking at the VIX volatility or fear index. There are three ranges. Above this blue range, upper range, bearish. Between the two green lines here, this is going to be in the low range, which is a bullish. And below this green line, that's the ultra low range, which is bullish. All of this is bullish, anything below this line, below 20. We are currently at 19.21, but it kind of looks like a trading range. Like it looks like down here, then it comes up, then it comes down, then it comes up. This does look like it's going to possibly come down. If indeed the VIX is going to do something like this to the lower end of this trading range, well, the S&P 500 here in dark blue, well, that's going to advance, telling me bullishness. Now we are looking at a seasonality chart of the S&P 500. This is a monthly chart, and you can see the word monthly right there. For the month, the current month that we're in, which is October, the market is down 0.14% so far this month. Going back 5 years in history, for the month of October, there is a 40% probability than which SPY will close higher than when it opened. Well, that means that there's a 60% probability it's going to close lower, telling you that this, from a seasonality standpoint, is telling you that for the month of October, we are not going to be looking for advancements. We're going to be looking for declines, which is bearish. All right, now we are looking at a 3-year weekly chart for the S&P 500. We have in here standard deviations, +2, -2 in gold, +1, -1 in pink. And on standard deviations, generally on the +1 and -1, 70% probability you're going to trade in between this range. And between +2 and -2, 96% probability. Right now, we are just pushing above the +2 standard deviations on this chart. Excuse me, +1 standard deviation on this chart. You can see the candlesticks right here. But I do have cycle brackets drawn down here where this low represents that low, this low, that low. This low is really yet to be determined. It hasn't quite tucked in yet, but I am kind of liking this action right here where this low possibly could be that low right there. Maybe. We'll see what exactly this low entails right now. But the part that you got to, and also I have on here a valid trend line, which is this line right here, drawn from this low to that low right there. And this valid trend line, I got a lot of lines on the chart right now. Let's clean this up a little bit. So what's happening here is that this market seems like it wants to just push. It's pushing. I've got drawn in here in this dashed blue line here what my theory is based upon looking at this action here, tucking in, this action here, tucking in, this action here, tucking in, and then advancing. So will the market actually do that? Maybe. I'm just looking at the past history of what's happening here, and I do see a low, a higher low, a higher low, a higher low, and this low is yet to be established yet. But if this is going to continue, this is going to be a higher low than that low right there. So before it tucks in a little bit and then moves and advances forward. Now, hypothetically, if this timing is correct from here to here, then that would take us to somewhere in November. So that is kind of over here. This is 2024. So actually, yeah, so this actually may even be in December, going out this far where it actually starts to pull back on this weekly chart. So that is what I'm looking at on this chart. Let's go ahead and clean this up and let's switch over and look at the 1-year daily. So let's go to 1-year daily and let's change our cycle brackets to daily. And we're just going to open that up and we're going to just bring this chart down slightly. Now looking at this, I have also drawn in here this dashed line, what I'm suspecting based upon this activity that I'm looking at right here. And I'm thinking that we are in this rising phase, mimicking this rising phase. In other words, this low right there is the same low as that right there. If I am correct, we are going to continue to advance here. If I'm not correct, well, it's going to go sideways or go down. But this is looking at the chart structure. I kind of think that it's going to do that. We have a cycle low here established with that. This cycle low, I'm thinking, is that one right there on this daily chart. So from this chart, I am saying that we are looking for upward bullish activity over the next few weeks until we've reached this so-called cycle high right here. All right, now we are looking at a chart that I created in Excel to give us an idea of how strong different asset classes and the 11 sectors of the S&P 500 are doing. And basically, I put the color green anytime you have 4, 5s, and 6s, which is 6 is the highest number you can get to fill in the data, which is based off of this information here and here. And the more green on the screen, the healthier everything is looking. Either way, we've got green for the color signals here and here. And we want to compare last week's reading to this week's reading. Now, in asset classes, we're losing a little bit of steam. We went from 91 to 81. But in the 11 sectors, we went from 82 to 83. So we actually got just one tick stronger in there. So no matter how you cut it, this is all bullish activity being an equity investor. All right, now we are looking at TNX, 10-year U.S. Treasury yields. That is the chart. That is the candlestick chart. I also have the S&P 500 in dark blue. I also have TLT, which is 20-year bonds, in black right there. Now, this chart is a little concerning. Now, I did put this green line in here because I suspected we were going to go from the bottom of this trading range up to the top of this trading range. Well, look what happened. We actually did that. And what an incredible Friday that was, because this is a daily. So each one of these candlesticks represents 1 day's worth of action. So on Friday, I mean, look at that. This is the thumbnail here of this action here. I mean, just explosive to the upside on the 10-year yields. So that is kind of surprising. And as yields go up, the S&P 500 or equities has more of a tendency to go down. And the reason why is because if you have higher yields and you can put that money into money market accounts or other accounts like that, and you're going to get a greater yield, well, that makes investing in equities, which is like the S&P 500, less attractive, because when you put your money into equities, your money is at risk. When you put your money into treasuries and bonds, your money is, generally speaking, either at no or low or lower risk than equity risk. So something to be, which is concerning. Now, TLT 20-year bonds, they already took a hard fall as this advancement in the 10-year U.S. Treasury yields were rising. You can see that they have fallen. But looking at the S&P 500 in dark blue during this entire time frame, it's done nothing but move sideways, which is a little bit concerning because it has not dropped. So from this chart here, I think there's a higher tendency for the S&P 500 to drop than advance. Kind of like what happened when you advanced from here to here on the chart. Let me just clean this up just a little bit. So when you advanced from here to here, the TLT, that went down, but the SPY actually went sideways. It didn't actually correct until way over here a month later. So if you look at when this whole thing started in September, then that, like right there, is when you started to decline in the TLT. Well, we haven't quite gone a month here yet, but we're just about a month past when TLT corrected. So this could just be a month trailing behind TLT, and this could come down. So This chart is telling me to be more bearish than bullish at this juncture. Okay, guys, that is going to wrap up this quick intra-month video. I do full videos at the end of each month, but this is an intra-month. So, October 5th, 2024, the market summation, according to me, Ken, your friendly host for Spy Trader Now. The charts are telling me this market wants to go higher from here. We want to go long this market, but we don't want to put on leverage here. We will buy 200 shares of SPY. Here is the transaction right here. And just hold them without any option for now and then watch the market action. This is our portfolio. We currently are in cash with about just under $123,000. So for us to go ahead and purchase 200 shares at the market rate for $114,596, we will still have money in cash reserves. So this is the transaction that I am strongly considering taking on as early as Monday. And that is how I want to place this portfolio. Now, even though I went through this entire entire presentation with my thoughts and opinions of the market is an 800-pound gorilla, and the 800-pound gorilla will do whatever it wants to do whenever it wants to do it. So you got to be respectful of that. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, and ring that bell. I thank you and wish you good trading.